Hello, I'm Donald Leggett, and welcome to the latest London South East CEO interview. We're joined again by Dominic White, Chairman at 8 Capital Partners, and they are the Aquis-listed financial services operating company. ECP's stated aim is to grow revenues through businesses engaged in the fintech sectors, such as digital banking, digital lending, asset, and wealth management. ECP said last week they hope to raise up to £10 million as part of the company's £50 million equity issue plans. And we're joined today by Dominic. How have things been with you?
Good, Donald. Thanks for having me back on again.
It's our pleasure. So how is life been, Dominic? You're busy.
We're very busy, yes. As you'll have seen, and investors will have read if they've seen the RNSs, since we announced our transformational growth strategy in September 2021, we've been doing a number of different things. So the first thing we did is we moved and changed from being an investing company to being an operating business focused on fintech. That goes along with the director's belief that the amount of technology being applied to financial services will continue to accelerate over time. So being an operating business in fintech is something we're extremely keen on. And the things we did in our transformational growth strategy that's been keeping us busy, going back to your question, is firstly, apart from changing that strategy, we structured a €10 million bond in the last 12 months, a listed bond, and moved its expiry from 2022 to 2026, reducing its coupon from 7% to 4.8%. So a lot lower interest for shareholders and the company to bear, and a lot longer duration of the bonds, so a lot more security over the company's funding over the next few years. The other thing we've just done, which was last month, is following shareholder approval, we went through a Rule 9 of the Takeover Code waiver process, which is a whitewash, which enabled the largest shareholder, Iwep, which is a company I control, to convert debt into equity alongside a number of other bondholders. It's about €3.3 million was converted into equity, and Iwep, through that Rule 9 waiver process, became a larger shareholder, which allowed it to go above 51% as a shareholder. So we've been very busy.
Crikey, you certainly have been very busy. And in terms of the broad brush of developing the business side of things, as you say, you're going from buying and selling to buying and operating. How has that been coming along?
Well, it's been coming on well. We've been reorganizing, and now we're into the acquisition or the organic growth mode. We have 2 subsidiaries already in corporate finance. They've been very busy. They generated €1 million of fees this year, which has been a big year for them. €1 million for the group through delivering an IPO this year, which is no mean feat in this market. And in terms of what we're focusing on now going forward, and the strategy, let's say, the detail of the fintech strategy, and where we're going to be putting our efforts in terms of operating, we believe very much in 2 areas of fintech. One is SMEs, small, medium-sized enterprises, and the difficulty they have accessing capital, that the speed they can get access to it, and the cost of it. It tends to take a long time, and it tends to be expensive. So through fintech, through digital lending models, through trade receivable fintechs, we're developing and working on businesses organically, but also through acquisition, that would enable SMEs to get faster, more efficient, cheaper access to capital. So that's one area of fintech we're very keen on. The other area of fintech we're very keen on is called wealth tech, which is in wealth management and asset management. And one thing we fundamentally believe is that retail investors, they get great access through different platforms, but they can't get good access to certain types of alternative investments like private equity, some forms of real estate, some forms of debt. And so apart from that, we want to use technology to provide better priced and a more diversified range of products, including these alternative investment classes, to retail investors. And we'll do that through application of technology. We'll also do that through consolidating 1, 2, or 3 smaller wealth managers into a larger business in 8 Capital, and then applying the technology to deliver those better products to the customers. All of that within a framework of, and that you were going to mention, I believe, of at the centre rate capital, we believe the best way to deliver all that is through a bank. So we're in the process of looking to acquire a digital bank, so not lots of branches, a purely digital bank, which provides the compliance, the regulation, and the credibility in front of the customers, because you are actually formally a banking entity.
Okay, so more of that in a moment. How's the fundraise gone so far? You were hoping to raise up to 10 million as part of the company's £50 million equity issue. So put all that in context for us. What does that all mean?
So what we're trying to do, what we are doing at 8 Capital, is reorganising the balance sheet, which was the focus of the previous year. And one of the ways we're doing that, we started with a €3.3 million debt to equity conversion. Across the other lenders to the business and the other bondholders, we've agreed to up to 40 million sterling of debt to equity conversions. The remaining 10 million we're talking about is an offer to current shareholders. That's the broker option, it's called in the RNS, up to so an offer to current shareholders and an offer to institutions, a direct placing to institutions, to come in alongside those conversions on the same terms, with a warrant, all on the same terms, to raise up to £50 million in total. It's going well. Clearly, it's a difficult market. I wouldn't say it's easy, certainly not easy. It's complicated and it will take time, which is why when we explained this in the RNS, we didn't say within 4 weeks we're going to raise X through direct placing. We said we are going to be doing this over time, and every time we're going to bring in capital, we'll make an announcement to the market so we understand exactly where we are and exactly where we're heading.
That makes sense. So in terms of retail investors, what would you like them to do if they want to participate?
Well, current shareholders can come in through the broker option by contacting the company directly. Retail investors, if they'd like to come in to join the journey and join the fintech, the journey and adventure that we're on, they can literally come in through acquiring shares through the Aquis market. The raise is within the range of the spread of the market makers. So they will effectively be coming in at the same price if they come in through the market today.
Okay, I'm sure they'll be interested in that. Your fintech strategy has broadened. It's got digital banking at its core, and we noted that you intend to buy a digital bank, digital lending, and wealth tech. So talk us through those subsectors for us.
Well, they directly map onto what the directors and the business believes are the areas of greatest opportunity today. As I was mentioning, the SMEs find it difficult, particularly through traditional lending, to get access to capital. And if they do achieve that through traditional lending, traditional banks, it takes a long time and it can be expensive. Alternative lenders out there provide sometimes better solutions that are cheaper than the banks. However, through fintech and through the models of underwriting, so the models of analysing the companies, we can understand not only through their financials, but we aim to understand through many other different performance indicators how creditworthy they are, which enables us to potentially reduce the cost of the funding. So we're committed through fintech to going through that process more quickly for these SMEs, with the end result of being able to provide cheaper cost of finance. And it's a similar thing when we go over and talk about wealth tech. It's about providing better products to the customers and at a better price. And so in wealth tech, what we're looking to do is provide better access to other forms of alternative investments, such as private equity, such as certain forms of real estate, such as certain types of lending, which are not really available on things like the Fidelity wide market, which is an amazing thing for and through the ETFs, which are fantastic investment tools. I use them myself. But through robo investing and through certain types of fintech, we hope to be able to deliver an even more diversified and even more wider set of investments that are less correlated to usual markets, so investors can get a wider spread of types of investment returns in their portfolio at better pricing.
So along with the retail market, to have access to more sophisticated forms of investment.
Yeah, exactly. And the piece around banking, as I was saying before, is what we've been saying for about a year. We were coming at fintech with hand in hand with compliance, hand in hand with regulators. And that's why we want to have a bank at our core, because that is by definition hand in hand with compliance and hand in hand with regulators. And it also potentially enables us to fund through the fintech companies with a more diverse stream or more diverse types of access to capital than comes through the fintech platforms to the end customers. And that's all good for the end customer, because that's all about having again better price capital.
So you mentioned a digital bank and purchasing a digital bank, as that's at the core of your strategy. So where are you in terms of that? I mean, I'm sure it might be quite time and price sensitive, so I'm not quite sure how to ask that question. But you know, tell us more.
Well, if there was anything concrete to say, I would have announced it. So there isn't a concrete answer right now.
You presumably have targets in mind.
Yeah, we have a number of targets in mind. There are some outline discussions going on, and as soon as we get into something more advanced, clearly we'll be keeping the market updated, and we look forward to doing that in the next few months.
Okay, it's been a tough year for everyone in the markets. To what extent has that affected you?
Well, it's been a difficult year for Rate Capital as well. Fortunately, I would say that difficult year has happened in a year when anyway we were reorganizing the business. So we weren't out there, we are now, but we weren't out there early in the year trying to raise money. We weren't really looking at doing investment transactions earlier in the year. We were more in the process of reorganizing debt with our bondholders, going through this whitewash process with our shareholders. And that is a perfect year to do that type of reorganization in. And we're looking forward, and we're very excited about the coming year, because even though it remains difficult, and it will probably remain difficult for a while, because we're in buying mode for entering into these areas of fintech we've just discussed, that potentially enables us to get in to certain businesses on better terms, better pricing, which is great for value for Rate Capital and its shareholders.
There you go. Every cloud has a silver lining, Dominic.
Yeah.
Where do you see the business in 2 years' time, and what are the next steps to get you there? Oh, this is my last question, by the way. This is my final question.
Okay. So in 2 years, where I'd hope we'll be, and in fact in the next few months, where I hope the business will be to have completed this £50 million equity issue, which is this combination of raising cash from current shareholders, raising cash from institutions, and converting debt into equity. We expect that to be done. In 2 years, we will very much hope that what I've described will have been built, will have been implemented. So it will be the ownership of a digital bank. It will be 2 bolt-on fintech businesses that works through the services provided by the digital bank to provide fintech services to the SME market, digital lending, trade receivables funding, and to the retail market through wealth tech, asset management, and wealth management activities.
And do you expect to have a busy next 6 months, shall we say?
Yeah, hugely busy. I don't think I've ever not been busy. So it would always be.
So you can guarantee it will be busy.
Always busy.
All right, Dominic. That's Dominic White from 8 Capital Partners. Thank you so much for joining us. That was absolutely fantastic, and I look forward to looking at that back and listening and learning. Thank you, Dominic.
Thank you very much.